Thank everyone who has joined this project webinar today. We're going to be going through around about a 35-40 minute, we call a project webinar on Central Point at Bastion in Liverpool, of course, run by INTEGRITAS. Let me first of all welcome Mitchell, David and Adam from INTEGRITAS. Good afternoon, gentlemen.
Thank you very much for having us.
Thank you for having us.
Yeah, fantastic. I'm really looking forward to deep diving into this project. I really enjoy these project webinars because I think it's a brilliant opportunity to meet the people behind the webinar in terms of the project, but also get a chance to deep dive into some of the aspects and then Q&A. So emphasize to everyone on the webinar, this is your opportunity in the Q&A box. Don't put it in the chat box, put it in the Q&A box. Any questions you have for Mitchell, for David, and for Adam, and you'll hear their backgrounds in a minute and what part of the project they look after. This is your opportunity to ask your questions. This is a live webinar. It is being recorded, so we don't read out the names live, just to protect anyone's anonymity. But just emphasize, brilliant opportunity to talk direct to these three gentlemen with all their experience and get your questions answered. Can't emphasize that enough. So let's get straight into what we're doing. So most of the investors on this webinar are from Elevace, and you maybe already know, Mitch and certainly the members of his team. And you may be thinking, well, who's this guy, David Johnson? So let me explain. So my name is David Johnson. I am the CEO of a company called Leo Crowdfunding, and we are an equity property crowdfunding platform. And on the screen there, you can see risk warning along the top. And if you go to our platform, again, you'll see risk warnings along the bottom and particularly the banner along the top as well. So we are a regulated platform. And if you read along the bottom there, you can see Leo Crowdfunding Limited. There's our FRN number. We're an appointed representative of Sharon Limited, which is authorized and regulated by the Financial Conduct Authority. Pitches for investments are not offered to the public. An investment can only be made by registered investors on the basis of information provided by Leo Crowdfunding. So what we're going to run through, all the slides, all about the Mitchell's company and the project, all of that has been approved as a financial promotion. So I'm just emphasizing that for you. But this is up to you to go away, do your due diligence, and then decide if this is an appropriate investment for you or not. So I'm hosting this on their behalf, if you like, providing a compliance umbrella, and that's really the context of why this is taking place. So before we hand over to the team, let me just give the very brief overview of the project. So the developers, of course, INTEGRITAS Property Group, well-known developers, obviously in the Northwest. And they've got a large portfolio, which Mitchell will talk about. But this particular project is for 69 residential apartments over 7 floors, quite near to Liverpool city centre. And you can see some of the main figures there in terms of the GDV. The raise amount for this project is £750,000, and that is equity into the project. So this is not debt. There's no security. There's no PGs and debentures over the company. That's all senior debt first charge stuff. This is equity. So you, the investor, actually buy a share in the SPV that owns the asset, and then you get a projected profit share, which we'll talk about later on. So what the team is offering here is a projected return of 19% per annum over a projected 24-month construction. So that's just a high level. But let's get into the team today. So let me hand over to Mitchell first of all. I know you've had a busy morning, Mitchell. I believe you were on Channel 5, or you've just literally had an interview with Channel 5 recorded. So thank you for dashing from a Channel 5 interview to be here live with us.
Yeah, no problem. Yeah, I had an interesting conversation talking about the GDP. And obviously we've seen an increase on the GDP when everybody was expecting a substantial downfall after recent times. So, that was really positive, and I'm happy to be here today. So yeah, just to give a little bit of a background on me, really, I've worked in the off-plan property sector for over 12 years now. Worked for some of the largest largest property developers and most reputable property developers in the world is where I started off, really. So the journey for us has been a real interesting one. We did our first development, actually exchanged contracts on the building 3 days before we went into lockdown. So as you can imagine, that certainly gave us its challenges. So that was our first development, which was a development called the Well Apartments in Liverpool. That was a really successful development. All apartments were finished, complete and occupied. We actually came in under budget on the build, and we finished 6 weeks early as well. So that was really exciting for us. The next development that we had, we took the profits from that development and put it into a development called Bastion in Bradford, which was again really exciting development for us. That development is again fully complete, fully within budget and complete on time, and is now actually fully 100% occupied. So from there, we're now active on 3 separate sites. We've acquired 5 sites this year, so it's definitely going to in 2022. So it's definitely going to be our busiest year to date, and extremely excited and extremely proud of what we've achieved.
Brilliant, and obviously we'll be hearing a bit more about your passion for Liverpool, particularly later on in some of the slides. But I suppose one thing that impressed me, Mitchell, when I met you and the team, was the team you had around you.
Absolutely.
There's a lot of developers here, really good developers. They're sort of SME type developers, but really they're it. The lead person kind of is everything. But you've put together a very, very good team around you, and it's brilliant to have David and Adam on today. So David, do you want to just explain your role as the development director and a bit about your background, please?
Certainly, David. Yeah, thanks for that. I was brought in basically to build the construction and delivery division for INTEGRITAS, to build a team around me which could focus generally on the health and safety, quality and overall delivery of all the schemes. Our kind of remit is to turn the 2D plans into 3D reality, if you'd like. We work closely with all the different divisions, including admin, sales, and all the divisions, pull it all together, have regular meetings to ensure that everything runs like clockwork. Any problems, we work together to overcome.
No problem. And your background before in INTEGRITAS, what sort of projects you've been involved in and which companies?
If I went through the companies, it'd be too long for our little slot, to be honest with you. But I've had many senior positions for some of the big 6 in the Northwest, the likes of Waite, ISG, Morgan Sindall, all developing projects from as large as Liverpool Airport, new terminal, to smaller developments of 20 odd units.
Brilliant, fantastic. So somebody builds them and someone has to sell them. And I guess over to you, Adam, on the as a sales director. So want to explain your background, please?
Yeah, David, thank you very much for the introduction. So as you just mentioned there, I'm the sales director here at INTEGRITAS Property Group. So essentially I head up all the sales operations for the business, which is obviously going extremely well for us with all of our projects. Quite a similar background to Mitchell, I suppose, where I've been in the property industry now for over a decade, originally working out over in the Middle East, which is where we sort of had our apprenticeship, as we like to call it internally in the office here. But I've been very fortunate to work with some of the UK's top developers, launching projects globally, successfully selling those out and delivering them on time for our investors. So that's what we're doing here now at INTEGRITAS Property Group.
Absolutely fantastic, and it'd be good as we go through these, we're going to get a sense of your everyone's experience and what they do on the project. Okay, so I think, Adam, you're going to explain some of the other key members of the team, and then Mitch, if you want to make a comment at the end of that.
Absolutely, yeah.
Yeah, absolutely. I mean, you made a good point earlier, David, in terms of the amazing team that Mitchell has built around him here. And for us, that's absolutely key in the success for any development company. So when our clients and investors are looking at us, look at three main factors really in what it is that we're doing. And, you know, we're building in the right location and we're selling them for the right price, but they look at the company and our ability to deliver these projects. And the only way that we're going to deliver the projects is making sure that we have the right team, and Mitchell has put that successfully in place. So we've all just been introduced in terms of Mitchell, David and myself, but in the background there, as you'll see on the screen, we do also have Rue, Ben and Mark. So starting with Rue was actually one of Mitchell's original investors. I believe he'll be able to tell you more about Rue than I can, because they've known each other for quite some time now. Originally invested into the Lyceum. Rue helps us now directly as IPG investment director to outsource investment for the business, which allows us to move forward with the company and the builds, etc. Ben is our senior quantity surveyor, commercial manager, so he controls everything on the sites and works very closely, obviously, with David and Mark. It's really important that as a development company, it's quite rare to see your own in-house construction team. So we have that in place here, which allows us to control costs and make sure that things are moving forward on the sites as they should be. And Mark helps us and the buyers help us with that instrumentally to make sure that, you know, although costs are rising in terms of materials, as Dave will also tell you, allows us to keep in budget.
Yeah, absolutely. And just to add to that, you know, Rue's a you know, a close friend of mine now, really. We obviously started off a path of, he's bought an apartment via Elevate, who were the exclusive sales agent, and unfortunately that development went into administration, but it is ultimately the development that, you know, maybe the developer that I am today. You know, I put my cash together with the likes of Rue and other investors. You know, he really was pivotal in buying that development back, and now he sits on board in, you know, in a director consultative role, really, and speaking to lenders, speaking to other investors, offering assurance. And, you know, the saying, the proof's in the pudding, is absolutely there with Rue. He started off as an investor that was ready to lose every penny that he'd had, and now he's part of the team. So, you know, the same with Ben. Ben's absolutely monumental in managing costs for us. You know, we approach things very much as a joint venture partnership with our contractors and the contractors that we work with. Ben is absolutely going through costs with a fine-tooth comb, ensuring there's not £1 out of place. You know, a wealth of experience, and the same with Mark when it comes to the finishings. You know, he's always fishing and looking for better prices and ensuring that we give our investors the best possible value for money.
Fantastic. So Mitch, why not just give like an overview on this project? You know, why did you go into this one, and what really is it, sort of, for the investors?
Yeah, so central point of Bastion is as it is in the name, it's part of the larger brand of Bastion Point. It's a brand new development in Liverpool city centre with over 69 residential apartments. And I think what attracted me to this site in particular is the location. It is absolutely a gateway to Liverpool city centre. You know, less than a 10-minute walk to Lime Street Station, less than a 2-minute walk to the Liverpool business district, just up the road from the new Everton football stadium, although it kills me to say, as I'm a Liverpool fan. It's just an absolutely amazing development. Location is everything for me. And, you know, if we can, a number of other developments in and around that area, and if we can make that part of Liverpool, the IPG part of Liverpool, I'll be extremely happy. But, you know, not only is it fantastic for location for tenants, but appreciation from an investment perspective is absolutely through the roof in that area. It's not quite a regeneration area because it is already developed, but I think we are going to see a significant amount of appreciation due to the projects in and around the area.
Okay. And already your sort of passion for Liverpool has come out there. So, I mean, why, you know, you're obviously a Liverpool boy, born and bred, and you've got great pride, I think, in your company that obviously improves the area and does projects that are relevant. But, you know, just if someone was coming in who doesn't really understand that dynamic, why invest in Liverpool?
Yeah, I mean, like you say, I've got a lot of pride in Liverpool. I wasn't born into money. I was born on a council estate in a deprived area of Liverpool 32 years ago, when it definitely wasn't the city that it is today. I suppose it was a deprived part of the country, but now it's the absolute mirror opposite. Over £5.5 billion investment made into the Liverpool waterfront developments with the Peel Group. Close to 15% predicted rental market growth over the next 4 years. Over £500,000 current population size in the Liverpool area. There's just so much going on in Liverpool. It's actually one of the UK's top 10 cities for tourism. We've got things like the Beatles, Cilla Black. We're actually quite a famous city, really, and it attracts tourists from absolutely all around the world. Not to mention, we've got 2 huge internationally recognised football clubs. Liverpool a little bit more so than Everton, so we'll get that in there. But it's fantastic for the city, and the tourism that Liverpool FC creates for this city alone is absolutely through the roof. The Liverpool Waters development forms part of a wider £15 billion scheme, which encompasses Widow Water's new Royal Liverpool. There's so much going on. I'll be here all day. And as you mentioned, I am very passionate about the city where I'm from, and that's the reason I make Liverpool my hub. We've got a couple of smaller developments in other locations, but the vast majority of our investments will be in Liverpool city centre, because it has its own microclimate. We're still probably 30-40% behind Manchester. That's not going to be the case forever. So I think now's the perfect time to be investing in Liverpool to take advantage of that appreciation potential.
Yeah, no problem. I'm still smiling myself here because the younger generation on the webinar are probably going, "Who's Cilla Black?" But that's, I suppose, the true Liverpoolians will know exactly who Cilla Black is. So cool. And then you've obviously mentioned some things there, and that just gives you again, from a transport link wise, again, Liverpool is just such a really good location in terms of key areas and transport. Yeah,
of course. As I mentioned, within a 5 to 10 minute walk, depending on how quick you walk, as opposed to Liverpool Lime Street Station, which has multiple trains a day to London, throughout the country and all over the UK. We've got the M&S Bank Arena, previously known as the Echo Arena. One of the major things is the University of Liverpool. Liverpool is actually home to 3 major universities. So as I mentioned there, University of Liverpool, which is one of the most prestigious universities in the world, not just the UK, actually in the world, and as one of the leading medical universities in the world as well. We've got Liverpool John Moores University, we've got Liverpool Hope University. So that's significant because we also have one of the highest retention rates for students in the UK at the moment. So a number of doctors, nurses that are going to university today, there's a high likelihood that they will be retained and stay within the city, which again is fantastic for investors who are looking for a rental income and looking for the tenants of tomorrow.
Yeah, all great, really good points. And Adam, from your point of view on the sales side, this project, Central Point, is obviously quite near some pretty significant infrastructure improvements. How does that affect sort of sales prices, or in your experience on the ground? What relevance is that to this project?
Yeah, well, it's a good question, and this answer will really just reiterate what Mitchell's just touched on there. I mean, Liverpool is a really, really unique city in the fact that it's obviously off the Mersey. So you'll see on that map there, the way that these sort of cities expand usually. Liverpool's a little bit unique in terms of you can't go west because we go into the river. We can't go east because we already have really established housing areas in those areas east. Over the past 10 years, the sort of construction has been to the south of the city, where you can see obviously Baltic Triangle, etc. So we're really strategic in where we bought this project, Central Point. Obviously, we're going to the north of the city now. So this is where all the expansion, all the investment is going. You can see the statistic on the screen there, 27.3% predicted growth in house prices across the Northwest by 2024. We've seen over 20% in Liverpool already since 2019. So it's extremely positive for us. Again, what we're finding at the moment is rents are rising also. So yeah, it's a really exciting time for the city, and we're glad to be a part of it. Mitchell mentioned earlier about us being close to Liverpool Water's expansion. You can see we're directly parallel to the start of that expansion as well. So yeah, we're in a really good spot.
And any more recent market changes just due to economic climate, interest rates, etc.? Has that filtered down into this sector, or only affect different sectors?
Yeah, well, it's interesting really, because my main role here is obviously managing the sales and where they come from, and how to ensure that obviously we get the figures that we need to do in terms of the investment. And we find trends change all the time. Obviously, towards the back quarter of last year, there was some changes in the government. Of course, there was obviously the interest rates. That all seems to have settled now. We don't expect to change prime ministers 3 times, for example, in this first quarter of January 2023. We get an awful lot of investment coming from overseas, Middle East, Far East Asia, and a lot here from the UK. So that seems to be the trend currently.
Yeah. Okay. No, very useful. Thank you for that insight. Okay, pivot a little bit then towards David then on the actual project itself and the construction. This obviously the sort of the 4 towers, one of them being this project. So how do you go about, David, in terms of the design, and what sort of client were you looking for as your buyer for these?
Well, regarding the design, David, obviously we've been from conception, we've always steered it towards city centre living, but luxury apartments. So that's what we've tried to achieve in all the finishings. But starting from literally the foundations, the ground lent itself to all the investigations to a friction piled foundation, which is done now. From that point, we've got a ground beam that goes around the building, concrete frame to first floor level, which forms the car park on Bastion. And then from which point we go to a lightweight SFS steel and facing brick facade. So it's quite a standard traditional build, a good solid build. And the current stage, we've now done basically all the groundworks. We've just got a little bit of the slab to pour, and then the rest is coming out of the ground. We've now got concrete frame being formed and poured. So things are, anybody who drives past can see quite a large progress every week, thankfully to the hard work of the teams on site.
So just to emphasize, you're already out of ground. Just to emphasize that. So you've obviously made some significant progress already.
Yes, we've got drainage in, obviously the pile foundation, ring beams, slabs going in, and we're now coming out of the ground with the concrete frame. So it's definitely 3-dimensional for anybody who would to pass the site.
Okay, and then the ground floor, a couple of commercial units, cycling, parking.
Yeah, we've got ample cycling storage, which was, to be honest, was one of the pre-commencement planning conditions. So there's more than there's 2 cycle spaces for every apartment. We have commercial units on the ground floor. Now we've got quite strict planning enforcement on these, so they're not going to turn into late night bars and clubs. We're looking to attract kind of street foods and craft bakeries, that kind of thing, which can only open, I think the restriction is till 10 p.m. There's also quite stringent planning restrictions on waste storage of stock, for example. So we're not going to have barrels and crates outside. It is literally got to be well managed. It won't look untidy. We're looking to attract professional services, architectural practices, consultants who work from a small base. It's ideally located, as my colleague said earlier, in the city centre and transport links. So yeah, it's really exciting times. We can't wait to deliver it now.
I think just to add to that is, you know, we're really wanting to create a real community feel. You know, I've obviously been speaking today on the news in relation to the GDP and sort of why that's a positive. We've seen significant cost rise, but I think a positive is from that is a lot of developers, 6 or 7 years ago had significant amount of unrealistic profits built into their schemes. That's simply not possible. We're not a regulated sector, but we are in effect regulated by our funders. We have some of the leading funders in the UK who back us now as a developer, and they absolutely go through everything, and everything has to be signed off by them and with a fine-tooth comb because of that. So I think taking a positive through the current climate is you will see the better developers like myself and some of the UK leading developers breaking away from the pact, if you like, and seeing a higher quality, better finished development.
Yeah, it's a very good point, Mitchell. Just the world of development is changing. There's no question about that, and developers, need to adapt their strategies in this changing market. So let me remind everyone, if you have any questions, stick it into the Q&A. If anything that's been said so far you're not sure about, or you want clarification around it, or you just have a different question that hasn't been covered, it's a question that you have as a potential investor, please feel free to stick it into the Q&A, and we'll be coming to a Q&A session just in a moment. So Mitch, in terms of the financials on the actual project on the screen there, is the high level, and again, remind people really where you want to go for the financials is the equity offer document. This is just designed to be just a little bit of an overview. So any key figures there, Mitch, you want to sort of draw out, your GDV and your overall costs and net profit?
Yeah, absolutely. I mean, the GDV is obviously close to £8 million. It shows it's a significantly valued development with a hard build cost of around 4.7. We've got quite a significant and stringent contingency pot in there, in the likelihood that the build price does increase. However, we have been quite conservative with that build cost, I believe, and that was an important part from Ben's and Dave's perspective to ensure that we already account for the likelihood of, there's a strong possibility that we will make a saving on that 4.7 million. But the profit on the development, as I mentioned before, developers are having to see a hit in that to deliver and not pass that on to the end user. But we are still seeing a profit of close to £1 million. So yeah, we are doing things correctly, and I think them numbers show exactly why and how we are.
Yeah, and the document was into more detail, obviously, on the profit and cost, profit and GDV, which if any investors are familiar with that sort of metric for judging a investment opportunity in property, you can get more details on that, of course. Should have just obviously emphasize there that, of course, along the bottom there, obviously don't invest unless you're prepared to lose all your money. You invest. This is a high risk investment, and you're unlikely to be protected if something goes wrong. So we do point people to the risk warnings. This is equity investment. You're buying equity in the SPV, and obviously getting a share of the profits. So how this works for investors, just to be clear, is the crowdfunding raise is 750,000, as you can see on the screen. And the crowd investor projected return is 19% per annum for 2 years. So 19% year one, 19% year two. Should the project go into year three, unforeseen circumstances, changes in economy, etc., and for some reason it drifts into year three, the Mitchell is agreeing that they'll actually increase the projected return in that year three. So up to 24%. So it's the pressure is obviously on Mitch and his team to deliver on time, and if it does slip, then there's effectively a penalty, is a way of describing that, so that the investors aren't been sort of hit and disenfranchised by an extended project. So the projected ROI on that is 142,500. That's the return back to the investors. So investors buy shares in the SPV, and then when the project's finished, the SPV buys those shares back, with, of course, the premium in terms of the difference in purchase and sale. So the SPV is issuing 1,500 shares. The minimum share, price of one share, which is the same as the minimum investment amount, is £500. And just a metric that maybe helps investors understand the share, that 142,500, that as a percentage of the projected net profit, if you remember, it was just under 1 million, that's 15.15%. So one way of looking at it is that the crowd investors are in line, projected, forecasted to receive 15.15% of whatever the net profit is. But this is a priority share where the investors get paid first before the SPV gets paid. And that's one of the reasons why it's can often be a potentially attractive investment because of the priority share nature. So I think that covers that pretty well. Any questions, by all means, get it into the Q&A. And Mitchell, from your point of view, obviously you're experienced in raising construction finance and senior debt. And I mean, is it attractive to you to be able to offer something out to your investor base and sort of bring them on almost as partners in the scheme? You know, I think in the conversation we've had in the past, that's something you enjoy, allowing, if you like, the masses to benefit from your projects.
Absolutely, yeah. I mean, your typical funding sort of strategy, and I think that's one of the questions here, so I may as well answer that now. The reason that we've gone for this type of strategy is because it is, in my opinion, less risky than having a funder in place that's got a significant first legal charge over the scheme, you know, which ultimately means that they will be paid before any investor. So, you know, although nothing is obviously risk-free, I do obviously see the risk and the risk in everything, but I do personally feel, it's my personal opinion, that this is a less risky approach, simply because you will have an actual equity in the scheme, and as you've just mentioned, will be paid out before the SPV is paid out upon completion of the development. So, you know, it's great. And I mentioned sort of Rue and other investors that invested in and bought back the Lyceum. That was all done on a profit share and equity basis as well. And you know, I think ultimately it is it's a different type of route, and it's the way forward for investors to share in the profits rather than just the bad times.
Yeah. Okay. Thank you for that. We will get on now with I think that more or less takes us to the main part. I think we've got to talk about conflicts. Yeah, 1 second. Yeah, so the exits, I don't know if Adam, you want to comment just on the exits for the investors?
Yeah, absolutely. So obviously the current investors that are purchasing in the project right now, as you see on the screen here, they're exchanging on 30% and then the remaining 70% on completion. It's really important as well to note at this stage that the wider Bastion project, we have 240 apartments, 190 of those of which have already sold. With this particular tower that we're talking about here, it's pretty much sold out now. So we've got 1 or 2 remaining units on this block. So 30% deposits down for the investors into the individual units. They pay their remaining on completion.
Yeah, okay, I guess that's again an attractive place to be in the sense that normally the challenge of these type of projects is it's all well and good building them, but you have to be able to sell them for the crowd investors obviously to be exited. But in that you've got the units already sold, deposits taken, then there is, all things being equal, because it is property and things can go wrong, but all things being equal, then the exit is in place, which I think is really good. Risk factors then, David covered just for nice and briefly. You obviously have planning conditions to look at, planning contributions, and obviously your contingency. I suppose in that contingency, if someone hasn't asked the question, they're bound to. Current climate in terms of materials, how have you mitigated that in your contingency?
Well, I think as we tapped on before, the experienced team we have around us have done quite good deals with material suppliers to hold at certain prices. Being in a position where we can place orders quite early means that we can hold prices and get some kind of guarantee throughout the scheme. We also work on a joint venture scheme with contractors where we have kind of a shared pay and gain mechanism. Their overhead and profit is ring fence, so they're not at any risk. They're not over-resourced, and we can then guarantee that they're going to deliver on time. So they're going to to the right cost. This share contingency pot then acts as a cover-all for any unforeseeables that may appear, because things do come and smack you in the face on these projects, and that pot is there to tap onto before it hits any profit, and we can deliver the scheme exactly to the quality and date that we've said we're going to hit.
Okay, brilliant. Okay, I think then we've just got one more, and then we can move to Q&A probably and get any questions answered. Yeah, conflict of interest, just to highlight this, obviously Leo crowdfunding obviously receives a fee for hosting the project, but that does not come from any investors. So there's no investor funds being used to pay for anything other. The 100% of investor fund goes into the project. And also just to highlight that INTEGRITAS use what is effectively a sister company called Elevius. Mitchell also owns that company. They're the distribution arm. So INTEGRITAS is the developer, Elevius is the marketing distribution arm. So you're probably used to getting communications from Elevius, but just to highlight the fact that Mitchell owns both those companies in terms of full disclosure. Let's go to Q&A now first, then I'll wrap up with the next step. So again, just to give one more chance to anyone, please add any questions you have into the Q&A, and we can deal with them quickly before we wrap up. The project is going live at 1 o'clock, so we do want to give a little bit of time for people to be able to go away and have a read of the document before making their investment if they so wish. There's been a couple of comments here regarding the ROI. Now there may just be a lack of clarity over per annum, either maybe in the slide I've put up, but just to highlight, just nice and simple, it's 19% per annum, projected to be 2 years. So that is definitely what the offer is. Obviously it goes into year 3, then that figure will change, but 19% per annum. So 2-year project, and then whatever the return on investment is of that 19%, obviously over each year for 2 years, as a percentage of net profit is what the return is to the investors. So I've tried to answer 2 or 3 questions there at once on the screen. If you have any questions about that, please reach out to the team, and they'll happily talk you through those numbers. Even I'm sure speak to David Mason, and they'll happily break those down for you and go through them with you in real time. Another question here is, in what cases can investors lose their money or suffer losses? It is obviously important to know that it is property, and for sure, unfortunately, there's never any guarantees in property, and neither Mitchell or the team can ever guarantee that this project will be built and sold in the time expected. But what you have is a situation where, if there was a huge crash of the economy, Mitchell would be something like we had back in 2008, and certainly there were projects then that unfortunately just never got complete, and therefore those who invested in those projects never had a chance to realize their money. So it's that type of scenario where potentially the capital would be at risk. In reality, though, Mitchell, it's fair to say, and again from your experience, particularly when you're out of ground, the asset now has a tangible value. So even if there was delays in exits, which can happen, the initial capital is into a share, and the share has an asset that has value. Absolutely, and I think just to add to that, nothing's risk-free. It is property, it's off-plan property, so it ultimately does come with risk. We minimize the risk, and I touched on it earlier. The reason that we're going down this route, there is no huge borrowing against this scheme. There's borrowing of less than £1 million. We put in excess of £3 million of our own cash into this development to date. So although again, nothing is risk-free, there is certainly an element of risk with this development and every other off-plan development. My aim is to mitigate that risk as much as possible by structuring it this way. One of the main reasons that developments go into administration is because they can't afford to pay the debts. Now, there is a minimal amount of debt in relation to the GDV on this scheme. So
it would be very difficult for anybody to put this scheme into administration, because there isn't that many people owe money. Is the simple answer.
Okay, fantastic. Someone's asked here about the net return. Is that before or after corporation tax? I can't remember offhand, and I can't jump onto the document on the screen because I'm sharing my screen. I don't know if David or Adam, from memory, it's before corporation tax.
It is. It's before corporation tax, because obviously the corporation tax will be in line with profits, and you don't know what the profitability of the scheme or that company is going to be until completion. So it's before corporation tax. Okay, fantastic. Any limits on how many shares investors can purchase? Yes. So the slide mentioned 1,500. So whatever 750,000 is divided by 500 price per share, that is the maximum amount of shares can be purchased. So there's a finite amount of shares have been offered to the investor crowd, which completes the capital stack. That's the money that Mitchell and the team need over and above their senior debt and other lending. So yeah, it's definitely finite. What will the applicable taxes on foreign investors? I think that's what will be the applicable taxes on foreign investors. That's probably better dealt with one-on-one with investors. Depends obviously what part of the world the investor is coming from, and whether they're investing as an individual or through a limited company. So I think Mitch probably better dealing with that one-on-one. Yeah, I think that just on that legally, we're not allowed to. We're not tax advisors, so we cannot give tax advice. What we can do is, if you speak to us on a one-on-one basis, we can put you in contact with maybe our senior accountant or another tax advisor that can give you that advice, as obviously that would be tailored to your situation.
Mm-hmm. Yeah, good answer. That's actually a better answer than mine. Well done, Mitchell. Pass it on to the tax advisor. So what type of exchange documents do the investors get against these shares? So yeah, I'm going to cover that actually in a slide in a minute. So if Mitch, you can remind me if I don't cover that well enough, you can prompt me to return to it. But rather than repeat myself, I'll deal with that just in a second on the process for investing. Where is the other finance development loan from? So is the senior debt in place currently, Mitchell, or are you still talking to some companies?
No, so we've got a number of different companies. One of our funders is a company called Maslow, who's funding our other scheme, the Lyceum. And then we've got a number of different funders that we work with. The current debt on the scheme again is a small amount of debt of under £1 million, and that is from a private lender.
Excellent. Okay, so let me just wrap up then in terms of the actual next steps and the process of investing and things like documents that were asked there. So next steps from here, this project goes live for investment in just under 15 minutes. Now what that means is that it's then open on the platform for investors to make their investment. However, the investment is not a confirmed investment until the project reaches minimum target, which is 250,000. If it reaches that, and when it reaches that, then there is a share agreement, obviously a shareholder agreement issued to all the shareholders. So the SPV puts out a shareholder agreement. Each investor then gets a chance to review that, and then they make a decision to accept that shareholder agreement. So when the shareholder agreement is accepted and the funds are transferred, that's when an investor is actually confirming their investment. So if you will, today, what it is a soft pledge. It's if you like, reserving an investment that when you complete the process, if you want to complete it, then you make a decision at a later date to actually press the button. So I hope that's clear. And certainly there are investors who make the pledge, then go in to do their DD. The vast majority go ahead and do it. But if something changes in circumstances, or there's something about the information they're comfortable with, you then can choose just not to complete the investment. So I hope that's clear enough. So literally 1 o'clock today, you can reserve your investment subject to finalizing it. In the middle of the screen there is what you'll see when you go to the link. When it's live, that will change. I definitely recommend and urge people to go and download the equity offer document. This is what's here on the right, and that will go into more detail that obviously we couldn't go into today for time. Now from there, And I know a number of you already have registered and you've been asking, okay, how do I actually make my investment? So you're on this, what we call the pitch page, the landing page. At 1 o'clock, this will turn to register to invest or log in to invest. If you're already on our platform as an investor, you obviously go to log in. If you haven't registered before, it's really important you understand that you actually have to register. This is part of the FCA requirement. You have to register to be an eligible investor before you can invest. And I'll mention that in a second, what that process is. But once you've logged in, you then decide, when you click the next step, you'll have this investment amount. So you put in the amount of £sterling that you wish to invest. It will then tell you how many shares that investment is giving you. If you're happy, you press confirm, and then it takes you through to the payment. And I want to just emphasize this. So there's two methods of payment. There's pay by e-wallet or pay by bank transfer. If you don't have money in your e-wallet, then you can't use the e-wallet for making your soft pledge. So on pay by bank transfer, you then simply click request unique reference number. That will then give you your number that you need to take to your bank to make the transfer. But you don't have to do that today. You can review the documents, review the shareholder agreement, and then transfer your funds. But what it will do, it will secure, if you like, or reserve your potential investment in the deal. So that is the steps that for those that want to invest at 1 o'clock, you need to take. Is that you log in, select the amount you want to invest, confirm your method of payment, and that then will secure your place at the table. Now, registration on the platform, for those that haven't registered, I know there's a number that haven't, you need to go up to the top right hand side. It says register. This is our homepage, leocrowdfunding.com. Once you start the registration process, you will have to complete KYC, AML, and then do a short, what's called an appropriateness test. Now, this is very important. It's part of regulation and compliance. You need to demonstrate that you understand the nature of this type of investing, that you're investing equity into a business. And if you have any concerns about that or doubts about that or what that means, go to the risk warning at the bottom and read through the different bits of small print on that. So that is the process. Then you review your equity offer document, make your investment pledge, and then there's this shareholder agreement gets sent out, and that's really the document that, if you like, is the legal relationship between you, the investor, and Mitchell and his company. You're issued a share certificate. You go on the register of members of the SPV. Sometimes even filed at Company's House, so you may be able to see your name at Company's House. So that is all the documents around completing the investment. And again, happy for the answer any questions on that, and the Elevate team are on standby to answer that. One last question: how long will this live investment platform remain open? That way depends on how fast it funds. This is quite a chunky investment. So it depends. We have projects that fund within 20 minutes, half an hour. Larger ones like this would probably take a couple of days or even a week or two. It really just depends how fast people review the information and then decide to invest. Yeah, that's kind of the market, Mitchell, isn't it? We can't say it's going to fund in 1 hour or 1 week. It just depends what investors decide to do.
Absolutely, yeah. That is the market, Dave, as you mentioned. I think one of the things that I would just like to add is, I am extremely grateful for everybody that is here today. Grateful for the team that's around me, and grateful for everyone attending. I think one of the things that makes us different to other developers, we act with integrity. It's the name of our company is INTEGRITAS. We were formed on the back of a failed development that we rescued out of administration, that we're now on site with and have funding terms agreed. And every single person involved in that original development will have all of the money back, as well as an additional profit. That's sort of what makes us different. A lot of the questions, and rightly so, are around risk. Most important thing for me is to mitigate that risk as much as possible. And I believe that the strategy that we take and the strategy that we pride ourselves on absolutely does that. And yeah, just again, thank you to everyone involved.
No problem. I think that will is us. I think there's a last. Yeah. So if anyone wants to reach out to Elevate, there's the screen grab there. I know that the team are happy to take any questions. If it's regarding the crowdfunding side, they'll pass it on to us, and we'll answer any question we can. So say we open live in about 7 or 8 minutes, so there'll be a flurry of activity, no doubt, on Mitchell's side and on our side, as the team is all ready for it going live. Yeah, you can if you're on this webinar, you've already been sent the link, which takes you to the pitch pages, and from there you can make your investment literally in about 8 minutes. So Mitch, I'll just give you the last word just for time. Any last one sentence that you have?
No, I think I probably jumped the gun on that, on my last words on the previous sentence, really. But again, just genuinely thank you for everyone. Thank you for everyone involved. Thank you for the team around us, and thank you for having the confidence in us as a developer.
Excellent. Okay, let's now thank Adam and David. I know you want to rush off and get ready for 1 o'clock. So thanks for being here, and thanks everyone for joining.
Again, David.
Thanks very much indeed. And all the best to everyone. Bye-bye now.
Thank you. Take care. Bye-bye.
Thank you. Bye-bye.